All right, the recording has started. So, hi everyone. Yeah, this is Southeast Asia Law Network's industry Meet the Industry Expert webinar, and today we have Joe Milsom, who is a partner at Pinnacle Wealth Management. So, we kind of came up with this webinar to introduce industry experts, which brings in a client perspective. So, the last three webinars we had were Glenn, Daniel, and Chris, who were lawyers at international law firms, and they brought in the lawyer's perspective. So now what we want to do is we want to bring in a client's perspective of the side of the law. So this kind of brings in commercial awareness. So if you're talking about um, being a lawyer, it's about serving your client. So what we want to give it through these webinars is to ask the clients themselves, what do you want from a lawyer and how should a lawyer serve you well? So that it really helps us build our commercial awareness through speaking to the clients themselves. I mean, now we are all students, so it's great to have a kickstart in this kind of webinar setting. And I will hand it over to Rachel and Jeff to do the rest of the introduction.
Hello to everyone. I'm Jeff Santiago. I'm the co-founder of the Southeast Asian Law Network. Welcome to everyone. We're here for the inside, the industry experts, because we want to show you the other side. Since we showed you what lawyers do, we want to show as well what the clients expect from the lawyers as well, and what doesn't involve the relationship with our client and a lawyer. So in this webinar, we have Joseph Wilson, who is a partner at Pinnacle Wealth Management Limited. I just want to say thank you for this opportunity, for your time as well to talk to us about your job, and I hope all the best for this webinar as well. I was going to ask, what do you do on a day-to-day basis, Joseph? Thank you.
Yeah, sure. Well, happy to be here, first of all, happy to help. Day to day for me is going to be predominantly around servicing my clients. So as a wealth manager, my role is to find out what exactly my clients are doing with their finances and setting up bespoke structures for them using trusts and offshore-based products to ensure that their money is going to last for as long as it can, or is going to grow to the largest size possible. So that's typically my day will consist of speaking to my clients, running simulations of the bespoke strategies we've put in place, and overall keeping track of markets and portfolio performances. So that's a typical day for me.
How has it been for you, the balance between sort of checking for the sort of markets and then talking to clients? And how have you juggled it?
Speaking to my clients about the markets, you mean?
Look at the markets, but at the same time, always speaking to your clients, always being engaged with them. So that's curious on how you manage that.
Yeah, fine. So I'm not a day trader, of course. So any small macro or any quick movement in the markets that are over the space of a couple of hours aren't really going to be affected if I've missed them. It's always handy for me to understand what's happening so I can advise my clients on a portfolio construction basis. But within a portfolio is a number of funds, and the underlying fund managers will take care of the day-to-day runnings of that. So as long as I keep abreast of what's happening in global markets from a macro and long-term perspective, really this can be done over a couple of hours throughout the day if I'm going to be busy with meeting my clients.
That's great. I was wondering that maybe just in case you're talking to clients and then you're checking already on the stocks. I was like, oh, that's quite. But it's quite good that at least there's a balance in regards to talking to the clients and a separate time to deal with the sort of trust and as well like doing those investments as well. I was curious as well in regards to your sort of like journey from probably like school to being a partner.
Yep.
Pinnacle Wealth Management Limited. Can you tell us about your journey as well? Thank you.
Yeah, sure. So I went to I obviously went to a school in Essex in the UK. My school was not a very prestigious school. When I first started, it looked very good. It was quite highly rated. By the time I left it, and this has nothing to do with me, of course, it was one of the lowest ranked schools in my county. So certainly haven't come from any kind of private school education. I worked hard. I went to university. I studied mathematics. So my background in that kind of passed over quite well to this industry. Whilst I was at uni, I made sure I did a lot of internships, summer work, which I recommend to absolutely anyone at university to get their foot in the door. I spent my time at tier 1 investment banks on the trading floor, for example, and middle office, clearing trades, clearing large finance deals. I came out of uni as a statistical analyst for firms, very quickly became the senior one within a construction firm before making the move over to the wealth management sector. I spent about 4 years working my way through the ranks, starting off as actually head of desk, but moved through to a kind of junior advisory role and just worked my way up to an associate partner, and then partner for me came about a year ago. So that's kind of it now. It's the next hunt, I suppose, is going to be for the overriding managing partner, but that's probably going to be a few years away.
Also, I think congratulations on being partner, and
Thank you.
hopefully next time for the managing partner. And so definitely in regards to sort of your career choice, I'm just sort of curious because you did a lot of internships with various financial institutions. So I'm curious on what made you decide on wealth management first and foremost.
Good question. I mean, financial services is incredibly complex, and there are so many sub roles within that. I mean, even I don't know all of them. It seems every day I meet someone who does something different within the financial sector role, from investment banking to more client facing like I do. For me, I like talking to people. Usually the favorite part of my job is I travel around London, I travel around the UK and sometimes overseas and visit my clients. I meet them face to face. I talk through things with them. So being able to travel, being able to talk to people, and overall, I like helping people. It's the kind of personality I am. I'm always going out my way to help. If it's someone on the street who needs a hand, to a car that's broken down, I'll always stop and see if I can help. So it's the kind of person I am, and financially, this is usually people's biggest concern is a worry for finance. So if this could kind of be alleviated, then I'd be helping in the best way possible. So that's why I am where I am today.
Definitely is. Thank you for the response, and I think it's true that in terms of like helping with finance, something that's really sort of like it affects their sort of livelihood, and I think like finance, it's sort of like the lifeblood of someone's as well, and not just their blood, but like it's the lifeblood of their life, and when they pay rent, and I think knowing how to budget well your money, it's something that's crucial in these days.
Absolutely.
Thank you very much for your response, and I'll pass it on to Rachel. And Rachel, present yourself as well. Thank you.
No, yeah, thanks for sharing your personal journey, Joe. It was very interesting. Yeah, always good to hear perspectives from the other side. Just to just to cover the basics, if you could describe wealth management more generally, like as an industry, how would you describe it?
Wealth management, a high level is just going to be, as I say, writing bespoke plans for clients. So high level, I'd say, what is wealth management? It's ensuring that you're doing the right things with your money, ensuring you're putting them in the right places, and ultimately you're not paying too much tax because you're not using the allowances available to you by each respective government. So wealth management is different in every country. Every country will have a team of wealth managers there, because pretty much every country has a complex tax system, and combining this with investment knowledge is the reason why we all exist.
Yeah, definitely. So it seems like tax strategy is very, very incorporated into your work. So obviously we covered what you do on a day-to-day basis. So just want to know, like, what kind of parties do you are involved in your day-to-day work? Like, would it be a lot of financial planners, a lot of lawyers, bankers? Like, yeah.
Okay, so the financial planners typically is without any disrespect to them, but a kind of lower end role of what it is that I do. So we encompass that as part of our role in actually planning for people's lives through these bespoke strategies. On a day-to-day, I'm partnered with a number of accountants around London and the home counties, so all the counties around London. So I work with them, I help their clients. Obviously an accountant is very good at looking back as to what's happened in the year and make sure they're paying the right amount of tax. My role is to look forward and make sure that in the future we're not paying as much. So we work very closely with them. I personally as well, the way I run my business, I am partnered with quite a few lawyers and solicitors. Typically, I work with divorce lawyers, probate solicitors, and those who set up things like wills, lasting powers of attorney, and overall inheritance-based tax structures. So it's the kind of magic three that people in our industries always say, that you have a good lawyer, a good accountant, and a good wealth manager or advisor working. So yeah, I work a lot with the solicitors, certainly.
Okay, yeah, I'll definitely keep that in mind, the big three that I should have in my life. So as you said, your job is highly complex, way higher than what a typical financial planner would do. So just to get an idea of your expertise on the market, do you see any trends in the wealth management industry that, like, if a student was interested in that industry, they should definitely be knowing about?
What should you be paying attention to? With ours, I'd say one of the key things, if you want to kind of get into what it is I do, and I actually work with a number of people that studied law and then moved into this role within my firm, other partners actually. I'd say always paying attention to markets is a good thing. Understanding how macros work, understanding, global economics is always a key cornerstone of what you do if you're advising clients around finances. But I think just being aware of the complexities of a local jurisdiction's tax system, so the UK tax system, if you're where I am in London, not so much. It's not exactly interesting, I will admit, understanding the tax laws, but the more complex it is and the less you understand it, the more there is a need for a wealth manager. So I'd say keeping an eye on those two things will see whether or not this is something that's going to interest you or not.
Okay, yeah, thank you very much. So in terms of like the global macroeconomics of things, the pandemic has obviously affected a lot of us. We're all stuck at home right now. So just wondering, how do you think the pandemic has affected the industry? Like, have investors becoming more conservative or more liberal? Like, what do you think?
Okay, an interesting point. Looking back over, and I can only speak for what's happened to my clients, I think in terms of behavioural changes that we've seen, this comes down to emotional versus rational investing. One of the scariest things that a lot of people in my sector and even a lot of fund managers agree is one of the scariest things out there right now is do-it-yourself investments. Investing is incredibly complicated, and it takes large multi-billion-pound firms to be able to analyze data to be able to then perform at the level they do. So one person going in and trying to do it themselves, especially if they're not an expert in the industry, can be quite catastrophic. So I'd say with that in mind, those who are investing more emotionally, they're doing it themselves. They have a tie to their own money because they've earned it. With that being the case, you're going to make irrational movements. When you see markets crashing, typically people pull their money out of investments, which rationally is the absolute worst thing you could be doing. It would be the same as selling your house when it's crashing down. You would just wait for things to pick back up again. But people behave with investments because they're liquid in a very different way. So those clients of mine who are listen to me more, shall we say, have benefited more in this, in just riding that wave out that's happened and the recovery. Those who acted emotionally are going to be in a worse position and therefore worry a little bit more. But I think across the board, people are going to be holding a bit more cash. They're a bit more bearish on the future of markets. But of course, things will always recover. Markets have always recovered across history, and they will continue to do so.
Yeah, considering how like indexes such as the S&P 500, do you think investing in index trackers are also acting emotionally, or was this a better investment strategy across the board?
I'd likely say that throughout this period, passives have always been something, and ETFs rather, have been something that's been quite popular over the last 4 years. Still, long-term data suggests that if you find a good active manager, they would have outperformed, but only about 5% of active managers do in fact outperform their relative passive benchmark. So it's about finding the right ones, and that's really critical in creating a good portfolio. I would always heed a bit of warning around the idea of ETFs and passives. When they go up, you go up. When they go down, you've just got to follow that roller coaster. And it's only in the last 4 or 5 years that really they've been performing well. Looking back over what, say, something like the MSCI World has performed, it's nothing to write home about since 2000 up to, say, 2015. It's only in the last 5 years that this happened, which shows one very specific market condition, and creating a fund that would work well across all market conditions on average is the key goal here, and not to be sucked in by what's been happening, but rather look at what's going to be happening in the future. And with the overexposure in the S&P, as you mentioned it, to something like the FANG, which is Facebook, Apple, Amazon, Netflix, and Google, looking into the size of them and the relative proportion of the S&P, that's a bit too much overexposure in my eyes to have into 5 singular stock, which are so highly valued at the moment.
Yeah, thank you. That's very insightful to hear. It sounds like client management is like a huge thing, a huge part of your job, just managing their emotions as well. Just wondering, what are the biggest challenges currently facing your industry and your work?
That's an interesting question. I'd say a lot of it is actually regulatory led. Now, I'm certainly not going to sit back and say that regulation is a bad thing. I think for the most part, the regulations that are being put in place is to protect people being missold things by what we refer to as cowboy advisors. So typically it's going to be making sure that the pensioners aren't getting conned out of their retirement money. But all of this red tape in place makes it harder for me to advise my client. And that can be very frustrating because it's something that's out of our control.
No, yeah, I definitely agree with that. Changing the regulatory landscape, I get tired of reading the news sometimes. Just there's so much to keep up with. But yeah, now I'm just gonna pass it off to Jeff to talk about the more law-related part of the industry.
Okay.
Yeah, so I'm just curious. Before the law part, what, in your opinion, what has been the winners and losers regarding COVID-19?
I don't think really any of us have won when you're sitting at home and you can feel a bit trapped in. I don't think anyone's necessarily won. I think there's people that have certainly got more of a silver lining to look at than others. From my perspective and in my industry, those are the people that had large amounts of cash or had some kind of cash buffer sitting around. I was certainly one of those people that jumped on the opportunity when they saw that markets across the board had dropped by 33%. So me being home here, yeah, okay, it's a bit of a pain. It's not as good as being in the office, and I can't do the things I usually love to do. However, looking at some of your money being up 50% on the year makes me a little bit happier, and it's at least a bit of a silver lining. Certainly more than those who acted emotionally and pulled their money out at the bottom of the market that have actually realized they've lost 30% of their money. So I'd say that's really the only way of looking at it, but no real winners in any of this.
Definitely, I understand. Thank you for the insight, and I think it's true. Because I was talking about sort of like, in regards to Pfizer, the vaccine that shares go up, and like for example, the airlines are like for example with Virgin Atlantic that they are going to go into structuring soon. But yeah, definitely, I think there's no real winners. It's just that people who did slightly better and people who had really worse year, I suppose.
Yeah.
So okay, I'll continue on to the law. So what role do lawyers play within the wealth management industry? And what kind of work or advice do you require from external law firms?
I'd say within the wealth management sector, you're typically going to find, every large firm would have an of counsel. They'll have a general counsel, of course. But within mine specifically, you'll find fund lawyers. Now, I hope my follow-up question isn't what does a fund lawyer do? Because in all honesty, I have absolutely no idea. I am really not astute with law, or I never trained as one. I never even looked into it. So all of you will know far more about this than I will. But they're obviously integral to what we're doing. From how do I work them and external ones? Again, it's going to be the kind of symbiotic relationship I have with helping lawyers' clients, and ultimately returning referrals back to them as well from any new business generated. So it's very much a symbiotic relationship for keeping the clients happy, keeping the solicitor happy, and overall keeping myself happy as well with larger lead generation.
So I'm curious in terms of what does the in-house lawyer do compared to the external law firm? Like sort of what the tasks that he's involved around in terms of the wealth management side. I'm just curious regarding that.
A lot of it's going to be likely into the establishment of products. So, for example, we would use maybe an offshore-based product that's based overseas that would be wrapped up in trust itself. So, obviously, you have to have a team of lawyers within the company that have a very high understanding of tax law, helping us making sure this product can be established without any hiccups. So I'd say there's a lot of cross-border law as well that's also used for my clients that are maybe remitting money from overseas. Lawyers need to get involved as well, obviously making sure that from a tax perspective and a regulatory perspective, the regulation of two different countries isn't overlapping and treading on each other's toes. So there's a lot of work there from an individual client need basis. But as I say, within a company, there's always going to be need for lawyers for all sorts of aspects of the business, which frankly I don't have too much to deal with. I focus more on the kind of client side and what I'm good at. I believe that everyone is good at their own thing, and I'm not going to try and even begin to comment or understand what it is someone else does. I'm busy with my own stuff.
That's fine. Just concerned on what are the sort of legal issues that a wealth management company faces? That's why why do they need lawyers in particular?
Again, that'll be the change of regulation typically. Especially here in the UK, we have the Financial Conduct Authority, or the FCA. They like to change their mind every 2 minutes over how things are going to be done, how you conduct yourself, how products work. So typically speaking, it's going to be the lawyers looking into, between the lines of new laws that are coming out, overall remitting then that information that they can extrapolate from these big documents that come out from the government, extrapolate the relevant bits of data, lead it on to us as then kind of planning specialists to not say manipulate, it's the kind of wrong word here, but to create strategies based on what's coming out. If the law changes, there can always be more efficient ways, and there's got to be an efficient route through. So we work very closely with them in making sure that we're finding the right strategies for our clients.
Yeah, definitely. In regards to regulations, a lot of red tape in regards to sort of what to do. Consumer, especially it's a consumer-led sort of consumer. What's called this one? It's consumer protective. Protecting the consumer is all about sort of the onus on making sure the consumer is not fraudulent. That's sort of reason, right?
Yeah.
That's why it's sort of tight on regarding financial services.
Yeah.
So,
Absolutely.
in regards to what kind of law firms do you usually engage in regards to it's apart from the in-counsel, what's your criteria in finding the law firms who you be sort of asking advice?
Well, obviously we've got a team of in-house, so we'd always hire in-house where possible if we find the best talent. But from my perspective in how, for example, I partner with a number of solicitors, and this is going to completely depend on what it is yourself or your viewers exactly want to go into within law, which of course is an incredibly diverse sector. From the guys I typically deal with, it's going to be making sure that that degree of professionalism that they have and their knowledge ultimately is going to be at least competitive. If I come across in my own field, if I'm trying to set up a professional connection with someone, and we're going to create this symbiotic relationship from a business perspective, which is obviously something that helps everyone, I need to make sure that I'm partnering myself with someone who's competent and someone who has an edge over the rest of the competition, because I think that can reflect poorly on myself if I affiliate myself with a lawyer or solicitor that's not up to scratch.
Definitely. I think I was thinking as well. At least there's no sort of preference of like US, UK law firms or anything, like Magic Circle, Civil Circle. It's all about like if you're competent enough for the job, that's okay. That's really interesting in regards to that, especially since for us we always associate financial services. When we go to universities, like Magic Circle, or US law firms. So I think that really is really a good sort of perspective in regards to like selection of law firms from client's perspective.
Yeah.
So, in regards to sort of just out of curiosity as well, what's your favorite part about working in wealth management actually?
I'm going to say again, speaking to clients, especially those clients that have been with me for a long time now, it almost becomes like you're seeing a friend. You've helped them out. They have great amount of respect for you because you've made them wealthier or got them out of a sticky situation which they were finding themselves in when they met you. So speaking to someone who really trusts you and is really grateful of what you've done for them, and again, it's like seeing a friend. I'd say overall that's the best part. I can of course say when I open up someone's review pack and performance is very high, that's always quite a nice thing. But I'd say looking at the look on people's faces when they realize how it is we can help them and how much we can help them, that's always quite rewarding for me.
I think definitely in regards to sort of talking to people and being sort of the trusted advisor, I think in terms of that it's always rewarding because like your help in your work like makes someone sort of happy in the sense that you help them in a really tough situation. I think it's similar to like some lawyers as well. Do you feel like that because we're sort of like a business advisor to them with legal elements as well? So definitely a sort of connection in there. So definitely thank you for your responses, and I'll pass it on to Rachel.
Yeah, thank you, Jeff. Now we move on to the fun part of the webinar where we actually engage with the news. So as you know, Britain will be leaving EU at the end of the year. The dreaded question, how do you think Brexit will be affecting your industry?
It's going to be affecting us a lot, and we've already seen that. Unfortunately, we're going to see a lot of, especially for what it is I do, where I deal with a lot of investment bankers and actually a lot of solicitors as well. I think we're going to be finding that a lot of the top talent is going to be moving overseas. Jobs will be being pulled back into Europe, which is certainly going to mean less clients for us. And a lot of the top guys as well will be going back into Europe. So the kind of caliber of clients that we're going to be speaking to could potentially see that dropping off. I'd say the big thing that's going to affect everyone though across the board in my industry is going to be any kind of knock-on effect to markets. Predominantly, it's going to be looking at something like the FTSE 100 and indices in Europe. I mean, that's already kind of priced into markets to an extent, but it's I think this is one of those things where there's not really many people that have won during any of this Brexit lark. It's certainly something that I wasn't too happy about. But I think we've got to just get on with it now. People are just fed up with it, frankly.
Yeah, definitely. I feel that. So because we are the Southeast Asian Law Network, obviously our biggest news of the week is the signing of the RCEP, which 10 Asian countries, ASEAN countries, and South Korea, China, Japan, Australia, New Zealand we've all become just formed the world's largest trading bloc. So do you see any potential opportunities in that for you, or any threats? What do you think?
Interesting question. Opportunities, absolutely. I mean, this is quite big, and it's something that we're all completely following. We have been following quite closely, especially when India, I think, stepped away from the deal, and I don't think from recent news that they've stepped back to the table yet. Certainly, what it's going to mean for the emerging markets in Southeast Asia, which is one of the emerging markets as we would call them. So typically the more volatile but higher long-term growth potential from an equity-based investment. I think EMs will grow with a little bit less resistance now. There's less tariffs involved. So for a smaller company looking to become established here as a bit more of a powerhouse, I think it's going to be a lot easier with less cost involved. Asia Pac as a general investment region, as we refer to it, the Asia Pac is probably going to become more desirable. Certainly as an investment as power, as it were, shifts from the west to the east, something we knew that would be happening over the next couple of decades, with China and India tipped to be the largest economies in the next decade or two. But certainly something like this, I think, will speed that up. You've got to remember that there's far more people in the east than there are the west, and as more emerging economies become more, as we refer to, kind of mature or more developed, to have better infrastructure, I think that we're going to be seeing the larger companies naturally positioning themselves closer to the larger demographic. So if there's more clients, they're going to be positioning more there, more clients, more profits, larger firms, therefore more growth. So certainly a lot of opportunity. The only concern that I think is being raised at the moment is the amount of power that it's given to China. I think the threat still comes down to governance and how data must be passed between companies and the government itself. And this breach of data is certainly something that's still massively disputed. So I think that could pose not so much a threat, but it could be seen quite negative to some investors. But I'd say that probably pales in comparison to the positives that could be drawn over the next few years.
Yeah, definitely. I do see a lot of foreign direct investment opportunities in this trading block. What's interesting is what you said exactly. There's kind of a within our countries itself, there's kind of an anti-Chinese sentiment going on. We're all very wary, but we're hopeful, because COVID has obviously impacted our economy a lot. But it was an interesting point that you pointed out in data protection. Like, do you think if there is there's sort of issues with that, like cybersecurity and data protection, do you think that affects the investment market at all, or do you think they're not that prone to yeah, what do you think?
I do. I mean, bar a handful of stocks, typically no one's really investing that heavily into China. And I think that this is massively reflected in, say, I think it was Huawei, wasn't it, recently, with the whole 5G network. And the reason why the 5G network was completely revamped in the UK, and I think the US had a similar thing, was due to governance in China saying that data must be passed on to the government, and that would be collected it from other blocks around the world. And that's something that's still, data is a big concern for people at the moment. Based on some of the scandals that have been coming out over the last 6 years or so. So certainly having a country that's deemed, certainly to the Americans, as a bit of a threat, I don't think that something like this is going to be just forgotten about until data is somewhat protected and isn't mandatory to be passed on to the government. I think that will still be on everyone's mind for an investment perspective.
Yeah, thank you. That was very insightful. So there is in the market itself that there's a recent trend towards ESG investing, which to tackle climate change and social issues, and I'm so excited for that. So just want to get your opinion on what do you think is like driving ESG investment?
Interesting. There has been a massive push towards ESG, and only yesterday, actually, I was speaking to a couple of clients who say that they want to move their portfolios into a more ESG focused kind of investments perspective. What's driving it? Well, we're becoming as a globe more climate focused, certainly. There's more and more talks about this. It's becoming at the forefront of people's minds. So less environmentally focused firms will slowly begin to fade away anyway. The likes of kind of let's say a firm that will only ever deal within oil, people are going to be moving away from this and it's going to be forgotten about in the past. So do you want to be investing into a company that has no place in the future? Because ultimately that company's doomed to collapse. But if everyone's moving towards this more sustainably focused world, those companies that are pioneering it will naturally benefit from this kind of rally behind them. So I think that's why people are investing, because they're just thinking what the world's going to look like soon and what of these companies will exist. An interesting thing to pose, though, and I mention this to a lot of my clients, is to do with where do we draw the line when it comes to ESG investing. And I mentioned oil companies. I think these are the exception to the rule. And this can be something that's seen as sometimes quite controversial. But if we're looking into more energy efficient power, a small startup, for example, likely isn't going to be the people that cracks how to, kind of run renewable energies. Realistically, it's going to be one of the big companies, BP, Shell. These guys are likely going to be the ones that crack it because the amount of money that they're pumping into renewables. Because realistically speaking, with oil running out, for example, in 40, 30 years' time, these companies won't exist, and they're not going to let themselves just dissipate into history. So they're going to move themselves into this more renewable focused kind of market. So I think actually investing into the oil companies at the moment is a necessary evil to then have a more environmentally focused world in the future. And something that I don't think many people have considered.
Yeah, definitely very interesting. Sorry, Jeff, I know you and we love an ESG investment. Do you have a question for Joe?
Yes, I'm curious because recently, because to Orsted, which was an oil company, but now it's moving towards I think now it's become the world's most sustainable company recently, and I think as well with BP that they're investing highly in green economy, regarding especially the project in hydrogen in Germany. And I was thinking, do you think in regards to like all companies trying to move into renewable energy, do you think is it significant? Do they need any significant changes for them to be considered ESG, or do they have sort of a hybrid system of oil and then renewable energy?
I think it's going to be transitional for them. If we're talking to the likes of BP and Shell, for example, I saw recently that Shell are going to be looking to create larger electric car-based infrastructure charging ports. So they're already doing a lot here, and BP are also following suit with some projects that they're coming out with. So I'd say it's going to be transitional. They're not overnight going to change to this kind of holier than thou company that's going to be just purely renewables. It will be transitional. But again, they won't let themselves disappear into the history books. They will make sure that they stay around. And if oil isn't an option, they're going to be pumping. They are the ones, in fact, pumping the most money into renewable research. So likely, if you're following the money, one of these guys are going to crack it.
Yes, thank you very much for the response. I'll pass it again to Rachel.
Yeah, we've got a question from the audience here, just talking about technology for a bit. What digitization opportunities are there in wealth management industry? And in your opinions, will GPs or funds try and use technology to streamline their work process?
Well, I think certainly moving into a more digital approach is something that COVID's taught us is possible. You know, working from home, for example, is something that employers have always said is impossible and no, you'll never do it. I think the fact that pretty much the whole world is working from home right now has proved that that's just not the case. And actually, a lot of people are working more efficiently from home. Certainly from my team, I've seen a number of individuals with far more productivity working from home than if they were ever in the office. So you know, certainly from a Zoom meeting perspective, Zoom has been obviously one of the massive beneficiaries of all of COVID. It certainly frees up my time where I'm not traveling half an hour to someone's office, meeting them for an hour, and then traveling half an hour to the next person's office and to the next person's. The available time I have is increased by about 30%. So I certainly have more time, so productivity has gone up. I just hope we actually don't become too digital. I don't want it come to a world where everyone lives within their own home and everyone kind of hermits a little bit more and kind of becomes into gets more absorbed into their own little bubble. I like going out. I think face to face is certainly very important from a social aspect. I don't think that the conversations that are having more naturally are happening anymore. Everything seems to be a bit more forced digitally, and you lose a lot of context on conversation as well. So yes, I think digital focus is going to be something that's going to be looked into more, but I hope for our sanity that it doesn't happen too much.
Yeah, all right. Thank you so much. And thanks, Hajra, for your question. So there's talk in the UK about like the chancellors looking to increase capital gains tax.
Mm-hmm.
How do you think this is gonna affect your industry and your clients? What do you think?
It's going to impact them a lot, and it's actually something we're quite worried about, in honesty. Now, certain tax bans are reviewed almost every year, and this year it's just the term for capital gains. So it's not news that it's going to be reviewed. It's in light of the amount of debt spending, the fact that this needs to be recovered somewhere, and ultimately, capital gains tax is obviously only arise when a capital gain occurs. So when you've bought something, had it for a number of years, and it's increased in value. The only people that are really going through that, from UK law anyway, are those with investments or those with second properties. There's a number of nuances to that, of course, those with buy cars, for example, and things like that. But realistically, this is a problem not for low income kind of households aren't going to be too affected by any change to capital gains. It's more of a higher earner problem. So they're typically the ones that governments go after. I'd say the problem here isn't with the tax rates changing necessarily to reflect income tax, so effectively doubling. If you're smart about investing and you're smart in terms of product placement, like my clients are when we create strategies for them, they don't pay capital gains tax. And that's because we have allowances. So we have a free amount that we can make in a gain without paying any tax. The abolishment of that is something that we're frightened of, because that will create, that will certainly remove one very efficient way of investors saving. But I think what it's replaced with and where we move after that is unfortunately going to be a less liquid, more tied investment strategy. So I don't think people will have the kind of liquidity that they will as a result of this, and overall their plans are going to be less efficient. So yeah, big worry for us. But it's there's nothing we can do about it at this stage. We've just got to wait and see and come up with a new strategy if it does change.
Yeah, definitely. Just touching on what you said about with government spending increasing and increasing, you just kind of see debt kind of ballooning in the UK. Do you think this will affect your industry in any other way, or is it mainly, do you think they'll just be taxing a lot more?
Well, any kind of changes to tax is going to affect us. It's going to affect the strategies we use and how much effectively our clients will have to play with, which means obviously less potential investment for us. I think that the biggest fallout is going to be through tax, and it's not going to be a quick fix. I think, unfortunately, we're going to be paying for this for a long time. I'm not necessarily saying that it was the wrong move in bailing people out. I think actually Rishi's been the chance has been quite good with what he's done. I just think, yeah, it's going to be something that we're going to see the repercussions of for a long time, unfortunately.
Right, very interesting. Just, as a strategy, just wondering, curious, have wealth managers kind of looked at crypto assets as a possible investment strategy for your clients?
Have we looked at it? Yes. Are we willing to touch it? No. It's too volatile. Bitcoin was a fantastic example of this. Typically, when the general public know about an investment and they're asking me about it, the smart money has already gone. By the time the public know about an opportunity, it's because it's been sold to them by the professionals, which is us, because we've bought it, held it, had a good increase and got rid of it. Yes, certainly a lot of people have made a lot of money. Have they done this through absolute pure skill? No, not at all. This was something that was held. And typically people who had it beforehand just seem to have had it, or they jumped on the bandwagon. There wasn't too much skill involved in this. It was an extremely volatile asset class, which means naturally it's going to bounce up and down like a lunatic. The problem with us is that we analyzed that typically Bitcoin crashed by 40% each quarter when everyone was talking about it. That is not a safe investment class. You might as well go to the casino. So with that level of volatility and the fact that it wasn't at that point regulated, and I'm not too sure if it still is actually being properly regulated, it means that you can get a lot of flash traders, so high volume trades that affect market movements. So you're a very, very small boat in the wake of the big ships. The big ships are the guys making the waves and benefiting from this. If you're in their wake, fantastic. If you're in their way, and a wave's going to hit you, and unfortunately, that's your profit wiped away. So there's no skill involved in that, and you're at the mercy of what essentially, if it's regulated, would be referred to as criminals. So yeah, it's not a viable option, and I certainly wouldn't recommend anyone use that as a core investment strategy. To play around with, fine, but a lot of money put in it, no.
Yeah, that's very interesting to hear. Yeah, thank you for that. Well, Bitcoin might not be a viable option, but what do you think of the underlying blockchain technology? Do you think that will affect your industry in any way?
Yeah, blockchain is, this is what I was going to come on to actually. Blockchain is certainly where the investment focus should be. Investing into the currencies themselves, I wouldn't say that's a smart move, because at the moment we haven't, as a globe, decided which one we're picking. There seems to be cyclical in which ones we like to go into. So until the currency's figured out, there's no point touching the currency. But the underlying technology behind blockchain certainly is something to focus on. I have a client at a tier one investment bank who the bank themselves has created a sub arm of themselves that's going to focus on blockchain technology. I'm not going to say who it is, of course, but clearly there is something there. It's just, again, how do we make it a viable option to be used by the general public?
Absolutely, yeah. Thank you so much. We've got another question from Hajra here. He wants to know, could you clarify what the hierarchy is in the wealth management firm? Like, so with law firms, right? We start off as a trainee, and then we go to newly qualified, and then associate, and then partner. So what's the alternative in the wealth management industry?
The wealth management's not as kind of tiered, I wouldn't imagine, and certainly speaking from my firm in particular, you would have an advisor assistant, so learning the ropes, which I suppose is similar to your kind of trainee role. You would understand kind of what's going on. You would try and you'd learn the job, for example. So you learn off the advisor, you shadow them. You'd have an advisor assistant. You would then move into an advisory role. So you'd start going out, but you would be monitored. You'd be part of likely a pod. So you'd have an overarching kind of partner, for example. For example, someone like myself would be managing and coaching and mentoring these new guys to make sure they come off their feet. Maybe joining meetings with them as well to make sure that they're not that they're saying the right things, and that's certainly something I was doing for an individual earlier on in the year through COVID. A bad time to start advising, I might add, but he's doing quite well. So speaking to him, making sure he's getting up. Throughout that, you're then out on your own. You're an advisor. That's absolutely fine. You're an associate at this point. And then it's to do, especially within my firm, of level of business written. So what kind of money you're bringing in, what kind of money you're managing, determines your level. So you can have associates. You then get to an associate partner. There's then eventually partner. As I say, the only thing after that is the more managing partner, which is, the more, taking the helm, what would be in your industry, more of the kind of CEO, COO, CFOs, and ops directors, for example. So yeah, something like that.
No, yeah, definitely. That's interesting to hear. So one other thing that I wanted to know about is like with the announcement of the vaccines from Pfizer, Moderna, AstraZeneca, what do you think about, because I saw that every single time the vaccine was announced there was a surge in optimism in the market. So what do you think about this? Like, is it a viable route, or are they being too emotional? What do you think? Is it climbing the optimism in the market?
Certainly well placed. And I think what's important to realize is markets react on speculation rather than action. So if Pfizer say, we've got this fantastic thing, here's all the proof, we're going to launch it in January, it then launches in January, there really shouldn't be a change in markets, because really what's new? It's working, it's doing everything, it's already priced in. So it's more on the news and the speculation. So that's why when they say, oh, we've had a bit of a step back, markets will go down, because, okay, the original speculation of it's on track isn't the case. So we've got to reflect our prices. I'd say for understanding of why markets are moving, we've got to understand why we are where we are at the moment. Now, a lot of markets crashed down when obviously COVID first hit in February, March time. Realistically, what's going to get the economy back to running on full steam? That's going to be people being able to go back into work, businesses being able to reopen. What's stopping that? COVID. Get rid of COVID, things go back to normal. So that's why markets will have any kind of positive news around what's happening in regards to kind of vaccines, which realistically is going to be the only way forward. Herd immunity is not going to work. Having studied medical statistics as part of my degree, for something that's globally widespread like this, it's too far gone. Realistically, vaccination is going to be the only way it's going to work. So for those people who are scared of vaccinations, see a lot of news of it in the States that people are worried it gives children autism or some kind of rubbish like that. I think they're pretty screwed.
I mean, at this point, you would kind of have to be kind of an idiot, like, not to be rude, to not take the vaccine. But yeah, I think we are out of questions for now. Like, very happy that we got through all of it. Our audience has submitted some really great questions. I'm gonna pass it off to Jeff. Do you have any last questions?
No, I think I think we will close it here if there's any questions right now. But if not, thank you very much, Joseph, for this opportunity to talking with us, for your time, especially in the weekend. And definitely it's really interesting how the sort of wealth management interacts with law, and as well keeping up with the trends, and as well our sort of similarity in regards to sort of our like aspiration in helping other people and being business advisors to them. I think that's something that as well it's sort of like a transferable skill for other people as well, and in regards to that. And
absolutely. And if I may, one kind of last thing to kind of leave on as to me, speaking more to you guys and to your viewers, I work with a lot of solicitors, and there's partnerships there that work very closely. So I'd certainly say that making sure you've got good business connections is very key. But on top of that, some of my clients themselves are solicitors. They are clients, they are partners at some of the larger firms and some of the smaller ones as well. One thing that I want to make sure that all of you do, if I can give you any advice and you take anything from this, I see the life of a solicitor. I look after hundreds of them. It's very time intensive. As such, you will put on hold the things that are important for you to solve. We all work because we all need money. We live in a capitalist world. We may like it, we may not like it, but it is the game, unfortunately. I'd say the key thing you can do is when you do start working, find an equivalent to myself, find a wealth manager, find an advisor, start young so you can retire early. It is the key thing that I tell clients, especially the young ones, new starting, make sure you find an equivalent to me, or me if that's who you choose, especially if you're in London, of course. No matter what country you're in, there will be one. Find one, please, so you can start getting advice early on. It's really important.
Yes, thank you very much for advice. And definitely find a wealth advisor. When you get TC, like in your first trainee solicitor paycheck, find a wealth advisor, and so you can retire early.
Yeah. And when you become a partner in London, give me a call.
Definitely, it'd be amazing. And yeah, as well, definitely in regards to sort of networking, I think it's always key to network,
Absolutely.
especially in law as well, since if you're a partner as well, you will find yourself trying to get clients, and I think that's sort of key as well.
Absolutely.
And I said, thank you for everyone for your time, and as well, hope you have a lovely weekend. And thank you for Joseph for this talk, and also for Rachel for co-hosting with me, and for the rest of the Southeast Asia Law Network. And I'll pass it on to Azar.
Yeah, I've nothing much to say. I'd just like to thank Joseph. It's been a really insightful talk. He talked about Brexit, ESG investments, blockchain technology. So we have covered a lot of the market developments right now. So we gained a lot from this webinar. And it was great, fantastic advice. What you said at the end, that finding a wealth manager is important. Definitely. Hopefully we all get training contracts. We all should get training contracts, and then we would maybe come knocking on your door. So thank you so much, Joe.
No, not to worry. Pleasure. Thank you for having me.
Thank you.
To everyone as well, it will be the end of the web.